The S&P 500 has went down 9% from its previous peak, and the Nasdaq 1130. If an index fund goes down 10% from its previous peak, it means we're in correction zone. In this video, we're gonna take a deep dive into the historical data of market corrections. We're also going to understand how much more can we actually go down. We're gonna compare this market situation to past ones and see how you can benefit from this play, because buying in correction zone is a proven method. In this video, we're going to mainly focus on comparing between the 2022 crash and our current market situation, because there are a lot of similarities. So if you weren't in the market in 2022, this is the 2022 S&P 500 chart. It went down about 27%. And after going down by 30%, the market went up by 110% in a very short period of time. The problem is we don't know what type of correction this is going to be. It can be a very short one, it might be already over. It can be a crash, it can be whatever. For example, April 2025, the market went down because of Trump and everything he said by 21%. Okay? And from that point on, he went up by 40, 50. Hey guys, this is Alon.stocks, and I post daily free content about the stock market and investing to help you reach financial freedom. It's important to mention this is not financial advice, and this content purpose is educational only. Please like and subscribe, and let's get started. So as I said, there are a few similarities between the 2022 cycle and the 2026 one. So in 2022, the market reached an absolute peak in January, and after that, tech stocks carried it down. In 2026, we saw a peak in January 28th, and from there on out, the Magnificent Seven companies are looking horrible. You're wondering how much did it go down? In 2022, Meta went down by 76%, Tesla by 73%, Nvidia by 66%, Amazon by 55%, Google by 44%, Microsoft by 37%, and Apple by 31%. And as you can see, in 2026, Meta 30, Tesla 24, Nvidia 17, Amazon 18, Microsoft 32, and Apple 11. So the tech companies drag the whole market down. In both cycle, oil and energy absolutely skyrocketed because of some inflation and geopolitics conflicts. Oil prices reached as high as 120 in the 2022 war between Russia and Ukraine, and right now it also reached over 100, and there are some analysts that speculate that it might reach over 200. Also, in 2022, after the COVID thing, inflation was absolutely in the sky. It stood on 9%. Right now, it's in 3.5 and it's probably rising. The good thing is, in 2022, the Fed did a lot of mess, the inflation was so high, and rates were high, and everything was off. Now we have a war driven energy dispersion, a tech sector sensitivity, earlier market picks, and inflation as policy anchor. So there's a similarity. The differences are the inflation is not as high and the energy is not as high yet. In conclusion, history shows that even with all the bad news and the wars and the dot-com bubble and the '08 crisis and 9/11 and COVID, in the end, the index funds like the S&P, Nasdaq, Dow Jones, whatever, they always return to their all-time high. The VIX crossed 30, the first time since April. And similar times the VIX spiked over 30, the S&P 500 was higher, 11 out of 12 cases, in a time zone of 1 week to 1 month later. It's also important to remember there are some bad years in the S&P, and not every year is a green one. Also, it's necessary that the market goes down for us to keep going up. The market can't just go up all the time with no corrections. Corrections are key for rallies in the future. Thanks for watching. I hope you enjoyed it. Please like and subscribe, and I'll see you in the next one. Goodbye.